Well, corporate earnings season is set to kick off this week with some of the big banks reporting results this Friday. Goldman Sachs warning that this could be the worst earnings season in years as companies fight a number of challenges like inflation and rising interest rates. Now, even as we look out to some of the banks that are going to be reporting this week, it was the prior week, last week, that we got the annual shareholder letter from JP Morgan CEO Jamie Dimon, who really kind of teed up what some of the tenor that we may hear from some of the other banks looks like right now, and really saying that right now, yeah, things are still, the economy still healthy. However, that there are still some storm clouds ahead, most notably international tensions, geopolitical tensions he cited, but also the rate of QT, quantitative tightening, that the Fed is still going on its pathway on right now as well.
Yeah, so there are some issues that are specific to the banks, particularly in the wake of the collapse of Silicon Valley Bank and the discussion that bank profitability would potentially be hit by that, some new fees that they're maybe going to incur from the Federal Reserve, of course, some of the outlay that they had to put out in order to try to stem that crisis. And then there's the idea of net interest margin, the difference between the interest that they earn on loans and the interest that they pay out on deposits, and whether we're going to see that squeeze to some extent. Also, whether we're going to see loan growth start to slow. We're going to be talking about that later on in our hours here. So that's specific to the banks. But then there is that overall concern about earnings for S&P 500 companies. Julian Emanuel over at Evercore writing in his morning note, stocks are hitting the wall into this earnings season. And he says results are likely to be a negative catalyst at the index level.
Yeah, that was something that was actually mirrored in terms of the expectations at FactSet as well. For Q1 and Q2 of this year, analysts are actually projecting earnings declines of 6.6% in Q1 and then negative 4.4% as well in terms of the declines in Q2 of this year, and not expecting any type of bounce back until Q3 and Q4, where in Q3 they're looking for earnings growth of 2.3% and then in Q4 9.3% according to FactSet analysts there. So all in, that would give you kind of a net out of earnings growth of 1.5% once everything shakes out by the end of this year as well. And you think about some of the sectors that we should continue to watch, especially coming off of Q4 2022. Keep a close eye on materials and communication services. Those were two of the larger kind of, when you think about the earnings that came in above or in line or below estimates, the largest misses were in materials and communication services there. Both on the revenue side and on the earnings side as well there. So keep a close eye on those two particular segments going into this season.
Yeah, and one maybe silver lining of all of this that Goldman Sachs points out, maybe this will be the trough for earnings, and then things will start to improve from here. But we'll see if that ends up being the case.